So most people, regardless of men or women, do not really have any kind of personal finance 101 education. I think men do a better job of faking it, and women feel a little bit more shameful about that. And that's the part that I hope to intervene with, right? Like, just come to me with your questions. Like, we will start from where you are.
Welcome to Taking Care of Lady Business, where we have conversations about power, value, and success on your own terms. I'm talking with women who are building influence, wealth, and authority, not by following someone else's playbook, but by deciding what success looks like for themselves. These are candid conversations, hard-earned perspectives, and no BS insight from women who aren't asking permission. They're setting the standard. I'm your host, Jennifer Justice. Most people call me JJ. Let's get into it. Hi, everyone. Welcome to this episode of Taking Care of Lady Business. I'm Jennifer Justice. Today, we have on the pod Catherine Valega. Catherine is the founder of Green Bee Advisory. She helps people make and grow money. Is that what Green Bee is for? It's like money, green for money?
Well, that is part of it. It's also green for the environment. Green versus red in my industry. You always want to see more green than red.
That is true. That is very true.
I help clients optimize their wealth trajectory while minimizing taxes.
Amazing. All right. So give me your background. How did you get into this?
Oh, sheesh. So I started on Wall Street. My first career out of undergrad was working for Lehman Brothers. I was on the government trading desk. And I like to say when I started in finance, there were 25% women, and there's still 25% women.
I was in the music industry. There was probably 25% women, and now there's probably 5% women. It's crazy.
It's crazy. It's really, really crazy. I had various phases in my industry. I worked for a mutual fund company. I was working in Switzerland for Credit Suisse, always in finance, sort of on the back end of things. And then found the CFP program, which is called Certified Financial Planner. And that allowed me to take my love of investing and actually help the end client, right? That was really the end goal. I wanted to be with people and help them with their own potential goals and trajectories. I will also add that I have 4 of my own daughters. So female financial empowerment has always been like very near and dear to my heart. You know, I have a little bit of a story, kind of child of divorce and getting myself through undergrad and grad school, and, you know, sort of have some of those challenges that a lot of us go through, but really seeing the dearth of women in financial services, seeing women really get disrespected in financial services, and also the lack of confidence that they have. And really, it's kind of an easy fix when you can find that partner that really listens to you and partners with you. And then having the 4, you know, mostly kind of young adultish daughters now, and really wanting them to be financially independent, knowing how to make that happen and how to be in charge of their own trajectory.
Because I came from a similar background of like, you know, first to go to college and grad school and myself. When did you finally see that there was a difference of how men and women are treated in business and in finance?
Well, I would say I recognized it early on, just being in the environment of government trading desk and having very few women around me. And quite honestly, and some of the women around me were in roles of sort of support. They weren't the decision makers, right? They just sort of defaulted into, you know, the assistant of the head of such and such desk. So I saw that early on. And then when I became an advisor, what I found, I went through this exercise, the conferences that I would go to, I would always sit next to women, and I would start up a conversation because that's where I felt sort of most affinity. And then I would say, oh, tell me about your role. Are you the business owner, et cetera? And too often their answer was that they were the admin. Oh, I'm the support on the team. No disrespect to those women, but I just realized I need to change it up. And so I changed in my career. When I would go to these conferences, I would look for the most powerful person in the room and go sit down next to that person and say, tell me what worked for you. What did you try? What would you say, you know, don't even consider? And then I'd say the third iteration of kind of coming into owning it was going to meetings again, looking around the room. I could be in a, lunch meeting where there's 15 of us at the conference table and maybe two women. Number one, knowing I was smarter than most of the room, I finally said, you know what? Instead of kind of sitting back and listening, I'm just going to own it. That realization felt really good. So I would be the one asking the questions, talking to, the guest speaker, throwing in my own comments. And that felt really good. And if I could encourage women earlier in their career, because they're probably smarter than 90% of the room, just own it. Don't shrink, because it just feels better. It feels truer to kind of who you are as a person and truer to women, right? Women supporting women. Maybe there's somebody else in the room who looks at you and says, oh, wow, she's a badass, right? Like, I want to be like her. Like, just own it.
And I totally relate to all those three phases as well. You know what I mean? You're sitting there like, oh, I'm empowered too. And then you go, oh, wait, my power is only given to me through these men. It's not given, like, I don't really have it in this business without it. You know what I mean? And been dedicating our lives to like helping women, really grow and scale and grow worth. When you were in these rooms and then you were like, own it. Okay. When was it like you realized that mostly women were not being financially educated in the same way, or, just didn't have the same knowledge?
Yeah, for sure. Well, I think in general, the US does a terrible job of financial education. And I usually tell people the only people who have really come through with the true kind of basis of personal finance 101 is if they happen to grow up with entrepreneur parents where they would have dinner time conversations around making payroll, laying people off. We can't go on vacation this year because we had a, tumultuous year in the business. And that is very few and far between. So most people, regardless of men or women, do not really have any kind of personal finance 101 education. I think men do a better job of faking it, and women feel a little bit more shameful about that. And that's the part that I hope to intervene with, right? Like, just come to me with your questions. Like, we will start from where you are. And I want you to ask the questions until you finally understand the answer, and we'll phrase it a different way. We'll use a metaphor. I will share a story that I've had with another client, right? This is very similar to another client of mine. And so I just don't think that happens enough in the world of kind of personal finance, because it's too jargon heavy and lingo heavy. One of the things I forgot to mention, but in between my career, I got a master's in international relations. And I am passionate about cultures and languages and speaking other languages. And the language of personal finance is really another language. I call myself a linguist in the ability to take these concepts and explain them in a way that's going to resonate, that's going to give you the energy to do the thing that I want you to do.
How do you approach it? Like, what are the things that you do to make, people feel comfortable talking to you about these things?
Part of it is what type of person you are generally as an advisor. Like, I am a people person. I'm 100% an extrovert. My family, I have a mix of introverts and extroverts. I get my energy connecting with people, and I can connect with anybody, right? I can always find some reason that we are similar. It doesn't matter if it's somewhere on the subway or, in a conference. There'll be something we'll have in common, or just a belief, and then we can share that type of. So I think part of it is kind of innate who you are as a person. And I actually really love the money stories, right? So everybody comes to me with their particular background and feeling about money. Some people are ashamed, some people are excited. And I love that personal finance part of the job. I mean, I always say the investing is the easiest piece of my job. It's really that behavioral finance part of getting to know my clients and how they're best going to work, and then phrasing the topics in ways that they will agree to make the next step.
I'm sure it feels like a lot of pressure to try to get them to get comfortable with money and everybody, you don't want to lose money. Well, you have to understand, if you're investing, markets go up and down, and that's not necessarily losing money, all of those things. I know that you really focus on women and pre-retirement. What are the mistakes that we're making? Give us all the tea, Catherine.
Gladly. First of all, I think there's a bunch of misunderstandings in this industry. Number one, I think when people are typically working with an advisor, their advisor hands them a paper maybe once a quarter, once a year, and it might have a chart and it might have some phrases like beta or alpha or tracking error. And the clients think, I have an advisor and they're doing what they need to do for me. But that is like the smallest piece of a comprehensive relationship, including wealth management and growth and tax management. So growing your wealth and minimizing taxes. So that's number one, is I think most people sort of assume that's enough. I get an investment statement, I'm good. And that is like so far from the truth, because we don't know how to invest your money unless we know all the other stuff before that, right? So I always tell clients, I might start crafting your financial plan and really looking at all the puzzle pieces and how they fit in together. And we may not need to take risk or have a super high allocation in stock. Maybe we can be more conservative. Conversely, most of my clients are still growing and we do want to take risk. And we do want to make sure we have a healthy allocation to stock. So that brings me really to the second point, is that I am very much an aggressive investor, and women tend to miss out on market returns. So, how many times have I gotten the statement of an IRA and I will look at their allocation, how they were invested, and it's been this way for a long time and way too conservative. And so we then need to slowly start that education process of, we're missing out on the potential upside of the stock market, right? Now, obviously there's volatility and we explain that, right? Your account's going to go up and down, but we have a long enough time horizon to invest aggressively. So I tend to be an aggressive investor, and a lot of my female clients are not as aggressive. So it's a kind of learning pattern where we might slowly take money out of cash and invest.
What do you mean by aggressive and not aggressive? You know what I mean? So women can really understand that.
Yeah,
and
sure.
At what ages, should you be less aggressive, et cetera?
It really depends on your potential personal picture. We might need a healthy, aggressive allocation. By aggressive, I really mean buying stocks versus putting your money in the bank.
Right. I mean, I think we've all heard over and over again, keeping your money in savings is never a good idea.
Correct. But I think what happens is women tend to make that first step and then get a little bit too nervous, or they'll start to do some research on their own and realize, you know what, I don't really understand that. I'm just going to go with what I'm familiar with. Most clients will need a healthy allocation to stock way into their 60s, 70s, maybe even beyond. Because if we want our portfolio to maintain pace with inflation, we can't be all conservative. What we can buy for our dollars is decreasing because inflation continues to rise, right? And most of our clients are relatively well off in that when they get to retirement, there's things they want to do. They want to travel. They might have a second home or a third home. They might be philanthropic, kids, grandkids, you name it. And so, that requires an aggressive enough portfolio that will allow us to do the things that we want to do, that we've worked so hard to be able to finally enjoy. Maybe even investing in other companies or angel investing and getting on boards and nonprofits, et cetera.
Does that include investing in your own account for stocks? Or are you talking about 401k, IRA, et cetera?
Great question. So the second part about financial planning and financial advising is, I think the concept financial planning is so esoteric, no one really understands what that means. And I think we've done a bad job as an industry really sort of explaining it. And so when I work with my clients, what we do is we build everybody's bespoke, unique financial portal where we're linking all of their accounts, cash, business, equity compensation, 401ks, IRAs. We're linking all of these accounts, and we can really see how the puzzle pieces fit in to then optimize them in the best way. So when I talk about stocks, it could be your 401k, it could be your equity compensation, or you just had an IPO. It could be your taxable brokerage account you have somewhere. So the underlying investment vehicles, stocks, bonds, alternatives, private equity, we can put them in whatever type of account we need to. It might be your IRA, it might be a taxable account, et cetera, my trust account, you name it. So the stocks and bonds can be in all of those accounts.
Right. And so when you're talking about, okay, it's one thing, right, to have a 401k, and then when you're 59 and a half, you can start taking this money out without being penalized, right, the 10% or whatever, but then you get taxed on it.
Correct.
Right. So I'm seeing so much more about this now, people talking about maybe 401ks aren't the best tax savings program. Can you talk about that? Let's say we're in there, we're investing, our stock portfolio, whether it's let's say it's in a 401k, is making all this money. And then you realize when you take it out, it's actually only worth half.
Absolutely. So huge, huge, huge. And that's why I think people need to look for advisors that can help them both on the growth and the tax minimization. I will give you a perfect example. It also entails that puzzle pieces of how we look at all the puzzle pieces. So when we do financial planning, we are going to project out what is your potential income, right? When you start taking, you can start taking at 59 and a half. You may not, you might still be working. So you might start taking your 401k retirement assets when you're 68. So for a lot of the clients I'm working with, when they've accumulated significant amount in retirement assets, the required distributions when they start taking them might be $300,000 a year. But the IRS is saying you have to take these funds, right? Because the IRS wants you to empty those accounts. People are not aware of holy cow, that is a huge tax bill. And, I may not need 300,000.
When are you required to start taking the distributions?
So the ages just changed yet again. And now they are as high as age 75.
So you don't have to start taking until 75.
Correct. For most people, some who are closer to retirement age now, it's 73. Used to be 70 and a half, then 72, now 73. But I'm guessing for most of your listeners, it's going to be 75. And when you think about it, your assets have been in that account for a pretty long time. And if we've invested aggressively, they've grown. And so now when I project out on my financial planning software, your required minimum distributions at age 75 might be huge. And as you said, they're taxable. So to me, it's best when you start working with someone before pre-retirement, right? The earlier I can get people, the better, because that allows me to do tax planning throughout your lifetime. So like you said, maybe 401k is not the best option. So we might say, let's put money in the 401k up to your match. And then beyond that, we'll do taxable investing. We might consider Roth conversions. We might consider other types of tax strategy with the end goal of when you are taking money out, you're no longer working. So there's no more income coming in. We are now taking money out. We want to be as tax efficient with that as possible, right? We don't want to send more money to the government than we have to, but that takes tax planning, which is great when you have more time to do the tax planning.
Right. So, most of these 401ks, if you're not working for a company, they're self-directed, right?
Typically a 401k, there is an investment provider. It might be any one of the big names that we've heard of. And then you have a set amount of investment options within that 401k, right? It might be, sort of an index type fund. It might be what's called retirement funds. You might have socially responsible funds. You might have a range. So you are self-directing in the fact that it is you choosing those investments. There's another term called self-directed brokerage. If the 401k plan allows you to, in essence, take some of those assets to your own account and then invest in additional type of assets. You're not just stuck to those fund choices, but not all plans offer that.
But if they do, like you could buy an investment property, those kinds of things.
Well, yes. However, those more complex types of investing, like investing in real estate, investing in just pure commodities, they're harder to do within retirement vehicles. So typically, before someone would want to do something complex like that, I would look at their plan and say, you know what, I understand your desire to invest in that particular asset class. We might do it outside of your retirement account because it gets really complex when you have to start taking distributions.
Didn't mean to get so in the weeds, but I think it's important to understand. And it took me a long time to understand that, like, my financial planner and my tax people don't necessarily have the same goals and motives. And I actually have to manage all of that and know enough to know enough and ask the questions, which is a very difficult place to be, right? You know, it's like we're busy as women, we're really busy already. And to then have to figure out all of this stuff, you know, now we get served all of it on social media, et cetera. And it's like, am I doing the right thing here or here? And every state is different too. And it's like, oh, take this tax deduction. For instance, something that gets thrown all the time in social media is the Augusta rule.
I was just watching that yesterday.
So you say what the Augusta rule is and how, like, in New York City, it's not even possible to do it.
Yeah. Well, let me just go back to one thing you said earlier, which is so important. So you are absolutely right. In typical kind of world of financial services, a financial advisor would say, I think we should do XYZ. Go talk to your accountant. And to me, that is a broken equation because number one, the accountant never responds. Accountants are very conservative and they're more reactive, right? So they're just like, give me your data from last year. I'm going to file the return and estimated tax payments. And so that is why I decided to add this additional credential. It's called enrolled agent. I can do tax filings. I'm not a CPA, but the goal was to intimately entwine tax preparation and tax strategy for my clients. So I can tell them, right, if you want to work with whoever you are working with, that's fine. I have the lingo and I speak the language. I'm happy to speak to them. But if you prefer to kind of have a one-stop shop, then come talk to me and I will coordinate the relationship on the tax side of things. So I have a lot of business owners and entrepreneurs where, you know, they have one point of contact. And I am then reaching out to my partner CPA firms to say, you know, these are our thoughts. You know, income was higher or lower. Are we adjusting anything? Is it the time to create a 401k plan? Let's start doing that. And really it's because that link is broken. And I think it is too complex to ask people to understand all of the different possible tax complexities. I want to take that off of your plate. Like my goal is that my clients are able to focus on their career, their business, their family, their hobbies, their health. Your money doctor is going to be able to manage all the other pieces for you. So that's really the end goal. Augusta rule pertains to renting out your house during particular events and then getting tax breaks and credits for it. I have heard about it mostly in the sporting world of like golf tournaments and things like that. I would say before even contemplating, and you're right, it all shows up on social media and they make it sound so easy. I would say, do not even go down that route until you have really discussed with your tax accounting professional.
Basically, I'm saying all this and throwing out one of the things that, like, it literally, it's like from Preston CEO to other people, do the Augusta rule. It's like, it's not that easy, dude.
No.
Hire your kids. In New York, they have to be 13. You can't just do that.
Nope.
Then you have to take on a payroll. You know what I mean? It's like, you're like, oh, you know, it's going to be so easy and sign up for this course. And no. It's not that easy.
No.
And it depends on, say, Augusta rule is called Augusta rule because of Augusta, Georgia, and their big houses, right? And so let's talk about, you know, just practical advice, right? There's W-2 employees, entrepreneurs with LLCs and S-corps. Okay.
Yes.
Let's say you have a W-2 employee. What is the number 1, 2, and 3 if you have 3 things that they can do to lower their taxes?
Absolutely. So number one, I would say if you have access to a 401k, your goal is to contribute the maximum each year. So often I see clients potentially start at like 5% of their salary. And it's like the annual limits. I mean, next year is $24,500 you can put in. And if you're over 50, you can add more money. If you're between 60 and 63, you can add even more. So number one, your goal is to work your way up to 100% of that absolute dollar amount. Okay. And that does not include employer match. I think that's one thing that gets confusing sometimes for people. People think I'm getting a match, so I can't put in as much. But no, it's an absolute dollar amount that we want to work on contributing. The great thing about 401ks is that we're dollar cost averaging into the markets because every 2 weeks, we're purchasing new shares.
Just say what dollar cost averaging is for the people who don't know.
Absolutely. So dollar cost averaging means we're going to buy the same security at different points in time. And why that is good is because, as we know, the markets go up, they go down, they go up, they go down. So sometimes we might be buying the shares at, 100. 2 weeks later, those same shares might have declined to a price of 80. So we've bought some shares at 100, some shares at 80, and that's averaging out to a price of 90. But what's so great about that is, number one, we're automating our purchases. We can set it and forget it. You don't want to set it and forget it forever. You want to review how you're investing. As soon as you set up, like, I'm going to purchase X amount, in my 401k, typically it's every 2 weeks. Don't stare at the market. Who cares? If the markets are declining, as long as we have a long enough time horizon, that's great. I'm going to be buying shares lower, right? So it's really kind of averaging out the cost of buying something. So that's dollar cost averaging. The other thing I would say, if you are W-2 and equity compensated, so we have a lot of clients coming to us with incentive stock options or restricted stock units. The taxes around managing to those equity compensation bonuses can be complex. And so it's not something that I really think people should be doing on their own. I think they should be working with someone to say, how does this fit into my overall financial plan and my goals? Am I going to own the stock and hold it for a full year and maybe get long-term cap gains if I can hold it for a year? Or am I going to take the stock and turn around and sell it? And then that's a different tax situation. So I would say 401k, max out, pay attention to equity compensation and manage that proactively, really. Job negotiation, certainly for women, negotiation and bonus negotiation every time. Do not assume.
That's what we know. You're speaking my language. Like,
Absolutely.
Some women don't know they should hire an attorney on the way in. If you are a VP or above and you do not have an attorney negotiating for you, what do you think the company thinks of you? Do you think the company's going to think you're going to negotiate well on their behalf if you don't do it for yourself and respect yourself enough to do it? So yes.
100%.
We always work with their accountants to be like, okay, if they're going to get this vest, we're not going to say don't give it to us, but like understand like how we can plan this out, right?
Absolutely.
Or is it a signing bonus immediately versus waiting for the equity, et cetera, over time?
Absolutely. That is such a huge thing. And the earlier women know to do that, the better off you've seen the numbers. It's like, if you don't negotiate on your behalf, you're giving up, millions of dollars of lifetime compensation. So that's huge. Once we hit those dollar limits of 401k contributions, so I work with what's called free cash flow, right? So, let's say you're making 500,000, you're bringing home 500,000 and your expenses are 300,000. So I might take that difference, right? A couple $100,000 and say, now we want our money working for us, right? It's always better if our money's working for us than we're working for the money, right? So we're going to take that free cash flow, that excess of what's coming in over what's going out, and we're going to get it working for you. And that might be taxable investment accounts. That can be stocks, that can be bonds, that can be real estate, that can be private equity, that can be hedge funds, whatever fits your desire for growth, what the market is talking about is the right, dynamic to be in. How long is our time horizon? Can we take an investment that might have to have less liquidity, meaning we can't get out of it right away? So don't stop at just retirement accounts. Then you turn to taxable accounts and we keep going and we do the same thing. We invest for growth.
Let's say you bring home 500. Are you saying that 300 is your taxes and your expenses?
Yeah, I was just making up broad numbers. So, whatever I have left after your income, your taxes, your
Okay, the 500 is after taxes.
exactly.
So you're making $1 million a year at this point.
Well, potentially, yes. So, in my financial planning, we're always getting to, what is my free cash flow number? And when I have a surplus, which is the goal, we want to scoop that up and get it working for you. Because if we don't, I'll tell you what happens. Goes to your account and then gets spent. It's the same thing a business owner would do is like, how can we be smart about our free cash flow? We're going to invest it. We're going to reinvest in the business. We're going to buy a different machine or property, start another brand, whatever. So we want to be very aggressive with that free cash flow and make it work for you.
What about an LLC, like somebody who has, entrepreneur?
Absolutely. So there are a couple of things to look out for. And there's one sort of trend on the internet, which I'd love to talk a little bit about. So LLC, you're an entrepreneur. Number one, you want to make sure you're working with an attorney. You've set up the right structure. You want liability insurance, right? So for whatever type of business you have, you want to make sure you have the right liability insurance. When you're self-employed, we have different types of retirement vehicles. If it's just you, we might do a SEP IRA or we might do a solo 401k. As soon as you start having employees, not just 1099 kind of contractors, but employees, then that kind of complicates what we may want to do for retirement planning. The biggest thing that I see people get sucked into, and this is because of the internet, is the internet says, let's file as an S-corp. So an S-corp is not a legal entity. It's just a tax filing status. And the reason people do that is they want to decrease the amount of income that they're paying self-employment income on, which is fine. I understand, right? Let's decrease the taxes. But what they don't understand is now, you mentioned it earlier, now I need payroll. Now my tax reporting just got more complicated. And so typically you really want to consider that once you're making above $500,000, even 600,000, then we can start to say, you know what? Let's consider the S-corp, even layering on the complexity of payroll and additional tax filing and support payments because it's going to cost more. You also want to pay attention to a ordinary customary salary, right? So you want to make sure you're working with the CPA who says, okay, as an attorney, like you couldn't say I'm going to make $50,000 a year because most of your attorneys are making, I don't know, 300,000 and above, right? So you'd have to be smart about how much you're taking as a salary. And then one last piece of that, because I think it's really important for women, is especially single women, your Social Security earnings history is based on that income that is reported to the IRS. And so sometimes I see women at smaller amounts, but sort of decreasing. They might take a salary of 60,000. If they were an LLC, all of it would be income to them. It might be 100, 150. And the Social Security just got that report of 60,000, and that's 1 year of income history on their Social Security record. That could negatively impact them down the road when they take Social Security income. So I'm not saying it's the wrong thing to do. I just want people to be aware of the ramifications of their decisions. And that happens because you're working with a financial planner who is projecting decades out, right? Again, that CPA is reactive. So they don't care. Tell me what you want me to do. I can help you reduce taxes today. But as you said earlier, like my taxes down the road from my accumulated 401k might be ridiculous. So how do we, back into kind of smarter decisions today? I think those are the pieces that are hard to get on your own. You really want someone who's paying attention to the taxes and estate planning and what's happening in insurances and the solutions out there.
And that's just it on social media. You don't have to, everyone just gives the advice and you don't like, oh, wait a minute. Like, do you have an accreditation for this?
No, exactly.
I mean, isn't it China that just like said that you can't talk about any of this stuff unless you're an actual lawyer, financial manager, you have an accreditation.
So smart.
Yes, I know. Yes. I've been getting all this stuff because I look it all up, right? And so next thing you know, my algorithm's like Augusta rule and S-corp. And I've had an S-corp in the past. It was a totally different situation where I had some pretty consistent consulting income where we knew what was coming in versus up and down, et cetera. So I've seen it all and I know what works and what doesn't. Plus in New York and California, especially if you live in New York City, like you have so many more taxes, right?
Yes.
Idiots we are, but we love it. Anyway, believe it or not, we have come to the end of the time and I cannot keep you any longer. That went so quickly. At the end of everything, as you know, we ask one specific question. When it comes to money, I know anybody who's worked in finance, women in particular, have had a lot of this. And that is, what's the worst advice you've ever received?
Recently, a very piece of bad advice is the whole crypto investing world. I'm not against crypto. I own it. But what I find too often is that people come to me and I'll say, do you have a Roth IRA? No. I kind of joke about it, but I'll say, let me guess, do you own crypto? Yes. And what they don't understand is that this shows up on the top third of your 1040. If you have sold or received as a reward any crypto, you have now complicated your tax reporting life incredibly. So that is the most recent piece that I see out there that people are getting sucked into. And certainly when the Bitcoin and Ether are going nuts. Again, I do believe in it as a long-term investment, but typically there's plain vanilla kind of boring financial planning 101 that we should cover way before we get to that. And also, I will agree 100% with everything that you've said in terms of social media. Like, do not think that what you see on social media applies to you. Take it as an idea, discuss it with your advisor, with your attorney, with your tax professional. But do not go down that rabbit hole. Just don't even it's a waste of time. Don't waste your time.
Catherine, thank you so much. If people want to find you, how do they do that?
Absolutely. So they can find me on greenbeeadvisory.com. I have all my information. I link to my socials, Catherine Valega on LinkedIn. My Instagram is actually Power, Wealth, and Tax.
Oh, look at that.
Yeah.
Love it. Amazing. Well, thank you, everyone, for listening to this episode of Taking Care of Lady Business. Until next time, I'm Jennifer Justice. Thanks to MedJet for supporting the Taking Care of Lady Business podcast. When you travel for work or internationally, the real question isn't if something could happen, it's whether you've planned for it. That's why I'm a member of MedJet and have been for years. If your security is threatened or you're hospitalized while traveling, MedJet can get you home and to the hospital you choose, not just the closest one. It's not travel insurance. It's about not leaving critical decisions to chance. If you travel regularly, it's worth having in place. You can learn more at medjet.com. Thanks for tuning in to Taking Care of Lady Business. If this was useful, subscribe and share with a friend. Make sure to check out the show notes for more on my guest and me, Jennifer Justice. Taking Care of Lady Business is a production of Lady Business LLC. See you next time.